A massive shift is happening in the global financial system. While the headlines focus on gold's historic run, they're missing a big part of the story. It's a story of deep structural deficits, explosive industrial demand, and a monetary metal finally breaking its chains. In the last video, we covered the framework: gold's job versus silver's job. Now we're going to prove it with the plumbing. While everyone is watching gold, a more powerful breakout is underway in silver. This breakout isn't just a rally, it's built on a fundamental supply and demand imbalance that has been years in the making. This isn't just another gold rush. A perfect storm is forming in the silver market, one that will redefine its value for the next decade. I'm not here to predict a price. I'm here to give you the dashboard. Let's start with the obvious. 2025 has been an incredible year for precious metals. Gold has smashed through record after record, fueled by geopolitical uncertainty and, most importantly, unprecedented buying from central banks. For 3 straight years leading into 2025, these institutions were quietly hoarding gold, buying over 1,000 tons annually to diversify away from the US dollar. This de-dollarization trend is led by the BRICS nations: Brazil, Russia, India, China, and their new allies. While their officially declared reserves are significant, their influence is immense. Whether it's BRICS rhetoric, trade settlement experiments, or reserve diversification, central banks are sending the same message: reduce reliance on the dollar. This relentless central bank buying has put a strong floor under the gold price, with analysts talking about significant new price targets. But this is where the mainstream narrative misses a key part of the puzzle. The focus is so heavy on the gold story that many are ignoring the flashing signals from its sister metal, silver. This is where we need to watch the plumbing, not the headlines. The simplest dashboard metric is the gold to silver ratio. How many ounces of silver buy 1 ounce of gold? Historically, when the ratio is above 80, silver is considered inexpensive relative to gold. In early 2024, it pushed toward extreme levels. But as silver caught a bid into late 2025, the ratio compressed hard. Here's the framework. Gold is the confidence hedge. Silver is the torque. The ratio tells you which regime you're in. This isn't just a number on a chart. It's the market signaling that the underlying fundamentals for silver are too powerful to be ignored. While gold is accumulated, silver is consumed, at a rate that raises questions about its long-term sustainability. And that brings us to the core of this story: the great silver deficit. Here is the first step in our sequence: the supply crisis. For 5 consecutive years, the world has used more silver than it has produced. Think about that. Every single year, we are eating into our above-ground stockpiles just to meet demand. This isn't a new trend, but it is hitting a critical point. In 2025 alone, the market is projected to face another massive shortfall, estimated to be over 100 million ounces. Where is all this silver going? Unlike gold, where demand is mostly jewelry and investment, over half of all silver demand comes from industry. And it's not just any industrial demand, it's from the fastest growing sectors of the global economy. This is what makes silver's story so unique. It is both a monetary metal and an indispensable industrial commodity. The problem is, you can't just flip a switch and produce more silver. Most of it isn't mined from dedicated silver mines. It's a byproduct of mining for copper, lead, and zinc. This makes the supply incredibly inelastic. Even with prices surging, it's difficult for miners to ramp up production because their main revenue comes from those other metals. For years, this deficit was managed by drawing down massive inventories held in vaults in London and New York. But reports suggest those stockpiles are now being rapidly depleted. We're seeing signs of physical shortages appear, with lease rates, the cost to borrow physical silver, spiking to their highest levels in years, a clear signal of an extremely tight market. This has led some analysts to argue pricing stress is showing up between paper and physical. and lease rates are one place it can surface. While the world was distracted by gold's rally, the physical silver market has been showing strong signals that a supply crunch is underway. That situation is being supercharged by an explosion in demand that, for now, shows no signs of slowing down. This brings us to the next part of the sequence, the bull case for silver, and the argument that it is in the early stages of a fundamental repricing. Three powerful forces are converging, creating what is arguably the most compelling setup for silver in decades. First, the industrial demand tsunami. Silver is the most electrically conductive metal on Earth, making it essential for the green energy transition. The solar panel industry is a voracious consumer. Photovoltaic demand now accounts for a significant portion of all annual global silver supply, a figure that has exploded over the past decade. And while new solar technologies are becoming more efficient, the sheer scale of global solar projects suggests overall consumption will continue surging. Then there's the electric vehicle revolution. An EV uses significantly more silver than a traditional car, anywhere from 25 to 50 grams per vehicle. It's used in everything from battery systems to electronics and charging infrastructure. With forecasts showing EVs will overtake traditional cars as the main source of automotive silver demand by 2027, this trend is gaining momentum. And it doesn't stop there. The artificial intelligence boom is driving the construction of massive data centers, all relying on silver for complex electronics. From 5G networks to smart devices, silver is the hidden element powering our future. This isn't speculative demand, it's real, documented consumption. Second, the monetary angle. As central banks hoard gold, it creates a tailwind for silver as poor man's gold. Investors who feel priced out of the gold market often turn to silver to protect their wealth. For every dollar seeking a safe haven in hard assets, a portion finds its way into the much smaller, much tighter silver market, creating outsized price moves. Finally, we have the price breakout itself. After years of being suppressed, silver has broken multi-decade levels and moved into price discovery. This kind of technical breakout, combined with the extreme supply deficit, puts silver into what analysts call price discovery mode. There is very little historical price resistance from that point. This combination of a structural supply crisis and an industrial demand explosion presents a once-in-a-generation opportunity. But to navigate it successfully, you need to stay ahead of the curve. That's why I put together a free guide called the Hard Assets Watch List, which details the key indicators to watch and strategies for investors. The link is in the description below. It's completely free, so be sure to check it out. So what does this all mean for the price of silver in 2026? This is where our dashboard concept comes in. We don't trade headlines on this channel. We track signals. Here are the key metrics on our dashboard: the gold-silver ratio, real yields, liquidity, which we track via the Fed's balance sheet and credit spreads, inventories from the LBMA and COMEX, and lease rates. If lease rates cool, inventories stabilize, and the ratio stops compressing, that's your signal the squeeze narrative is weakening. Following a monster surge in 2025, the data suggests silver has established a new floor. The conversation among bulls then shifts from whether it can hold its gains to how high it will go. The goal here isn't to sell you a target. It's to show you the conditions that would have to stay in place for those targets to even be realistic. In that scenario, the conservative estimates from major banks for 2026 have already been left in the dust, with those same banks reportedly revising their targets upward. More bullish analysts and technical models are pointing to targets well into the upper double digits, or even over $100 per ounce. Financial author Robert Kiyosaki has made headlines with a forecast of up to $200 per ounce, arguing that a flight from fiat currencies could trigger a historic rush into the tiny physical silver market. While triple-digit silver might sound extreme, it's important to consider the context. We are in the 5th straight year of a supply deficit with no easy way to increase production. We have powerful demand drivers from green energy and AI. And we have a global monetary system that is actively shifting away from paper currencies toward hard assets. For many, this looks like a perfect storm. The industrial world can't function without silver, and the financial world seems to be waking up to its role as a store of value. For the last decade, silver has been the forgotten precious metal, living in gold's shadow. That era is coming to an end. A major rally isn't a fluke. It's the market finally recognizing a fundamental reality. Such a powerful move in a single year is a significant signal. The data shows that silver is not just a monetary hedge anymore. It's a critical strategic commodity at the heart of the world's most important technological transformations. The story to watch in the next few years isn't gold's steady climb, but silver's explosive catch-up. The historic supply deficit, coupled with relentless industrial consumption, has created a coiled spring. We've seen the initial breakout, but the data suggests the real move is just getting started. While no one can predict the exact price, the forces at play are undeniable. We are entering a new paradigm where physical scarcity plays a much larger role in its value. Don't make the mistake of watching the gold price and thinking you've seen the whole picture. For many investors, the real opportunity, the truly historic run, is happening right now in silver. So yes, silver may have the bigger upside, but it also has the bigger risk. In the next video, we'll answer the question everyone keeps asking. Is silver actually the better hard asset than gold? And we'll do it the way we always do, not with opinions, but with the dashboard, real rates, liquidity, the ratio, and the Act 1, Act 2 sequence.